What's your take on it?
Well, look, I don't think the report is really as buoyant as the payrolls number actually suggests, because when you look at the household survey, and I do focus on this one a little bit more in this particular report, it is a more expansive measure that takes into account the self-employed people and household workers. And, if you look at that, you do see a little bit of weakness, or at least loosening up in the labor market that's emerging. So I think the Fed is going to focus on that. The Fed is going to focus on the fact that wage growth is running a little bit slower this time around than it did the month before. So I actually think that's a positive, and that's how the markets are certainly interpreting in this. I will say the Fed also has plenty of reasons to keep on hiking rates, because the data, the economic surprise continues to be so resilient. But in a way, they've sort of pre-committed to a pause. And I think given, again, the weakness in the 3.7% unemployment rate, I think they can have enough credibility to pause in June.
Anastasia, you've been constructive on tech, you've been constructive on this market. I remember several payrolls reports ago, you talked about breaking out of this tight trading range of 23 to the upside. Anastasia, we've done that. Can you make the argument now with conviction that now is the time to lock in some profits here?
Look, I think in parts of the market, it is absolutely the time to lock in partial profits. And in particular, I am looking at the NASDAQ. I'm looking at the semiconductors. I mean, the rally in semiconductor stocks, for example, has been stunning year to date. It's up 65%. And especially in the last couple of weeks, the semiconductor space has gone parabolic, which we all understand why, because semis are the key enabling technology of artificial intelligence. But anytime you see something move to the upside so far, so fast, so parabolic, you get into an overbought territory, and that's exactly where we are today. And then also, John, I look at the valuations of the semiconductor stocks, and the SOX index, for example, the valuation expanded from 13 times multiple at the October lows of last year to 28 times today. And don't get me wrong, I'm a huge believer in the semiconductor story and the artificial intelligence story. But if I take a tactical investor perspective near term, that's a sector that's looking stretched on positioning, on valuation, on technicals. And so for those reasons, I would want to take profits. And by the way, when you have this setup, you always are waiting for some sort of a negative catalyst. And we don't know which way the Fed is going to move in June, but I think there is scope for a hawkish surprise given how resilient the data has been. So if we have to reprice the path of Fed policy higher, then I think that's the ultimate negative catalyst for semiconductors. By
Next
the way,
up for that debate,
I want to buy it.